Okay, good afternoon, everyone. My name is Jim Abbott. I'm with OptionsCity Software, based here in Chicago, and today we're pleased to host, in conjunction with the Montreal Exchange, a webinar titled Trading Canadian Short-Term Interest Rate Options. I'm happy to be joined by Alex Ruggiero from the Montreal Exchange. He's going to give us a brief presentation on the exchange and their offerings, predominantly in the short-term interest rates and the options that go along with it. And then I'm going to give you a brief overview of OptionsCity and our offerings for both trading options and for automated strategies, algo trading. So with that, I would like to introduce Alex.
Good afternoon, Jim. Glad to be in the lovely city of Chicago. I'm going to start the presentation going over some of our entities of the exchange. Just on this slide. Okay, right here we've got the Montreal Exchange, and our clearinghouse is CDCC. We also have the Toronto Stock Exchange and its venture, a few other entities that were recently added to the group this year, and growing group. Now, the first slide kind of going over the evolution of our markets. As we can see on the first chart, our options market has been growing steadily since 2005, and on the futures side of things, doing very well as well. 2009 to 10, you can see a significant jump, as well as 10 to 11. And in the last year, we were able to maintain some growth, which is actually remarkable considering the environment. On the following slide, we get to see here the division of our volumes per product. Big benchmarks are CGB, BAX, SXF, and our equity options, which we'll be getting into details in a bit. Before, here we go. We have the SXF Equity Index option, S&P TSX 60, equity options, 10-year, 5-year, 2-year, our STIR future, and the options on those STIRs. Kind of be this is kind of the way the presentation is going to be going as well. Before we get into the products, I just wanted to mention a few features of the exchange. Predominantly an outright futures market. About 80% of our trades are done so. However, we do also offer listed strategies, calendar spreads, packs, bundles, strips, butterfly condors. It's a FIFO order matching engine. So for all products, it's a FIFO basis. We offer implied in, implied out, block trade facilities, exchange for risk, exchange for physical, and intergroup strategies such as, for example, a 5-year, 10-year spread. So starting off with the first product, equity index futures. Fairly good of a product. We've needed actually a bit of a partnership with market makers starting February 1st. We've got 4 market makers doing a great job providing liquidity on the product. It's got an average daily volume of about 10,000 contracts and an open interest of 150,000. Also launched a mini contract in 2012. The following few products are all going to be in the interest rate space, starting with the CGB. Great year for a 10-year bond future. 36,000 of average daily volume and 270,000 of open interest. Really our best product in 2012 with a growth of 27% year over year. Seeing an increase in participation from a variety of clients, pension funds, hedge funds, proprietary traders all over the world, increasingly from foreign countries. So that's a really good balance for this product. The 5-year CGF, along with the CGZ with a 2-year bond future, those two contracts needing a bit of help. We relaunched them in July 2011. So for like any other contract that was trading basically nothing, it's always difficult to get going. We got market makers on July 2011. As you can see here, volumes have been ranging about 1,000 average daily volume throughout the past 2 years. The contract's been sustainable, which is a good start. And it's been about 1.5 years now, and we're anticipating continued growth on those two contracts, as we can see here with the CGZ, the 2-year bond future. And now for the main part of the presentation, we're going to be dealing with the STIR short-term interest rate futures. The BAX, our benchmark product of the exchange, based on CDOR. It's cash settled. Feature here is half tick on our first contract, and the latter contracts 2 to 12 is a full tick. So we go 3 years out. We could see here, given the graph, for example, in January, we have 76% of our volumes done in the front 4 contracts, 24% done in year 2 and 3, as represented by the red and green part of the graph. We're doing about 100,000 contracts a day, good open interest of 550,000. And we've recently as well got market makers to support reds and greens, particularly years 2 and 3 out, which is translated into an increase in volumes, and which leads us to our main focus of the presentation, the OBX option on those BAX. The main reason actually why the exchange is bullish on this product is mainly due to its underlying, which has been performing greatly. The options have an average daily volume of about 2,500 contracts, 90,000 of open interest. It's a product, like I said, that we really believe in. We've seen good volumes in pockets in the last few years, but lack to maintain rhythm. We got market makers for that reason, which we'll see in the following few slides. But one thing I wanted to highlight was that if you look at the options to underlying future ratio, it's been going about 3% for the last while. If you compare to our peer exchanges, this ratio could easily be doubled, and that's why we strongly believe in this product probably doubling, tripling in the next few years. And to do so, as I mentioned, we're getting market makers. We've had market makers as TD securities starting in 2011. They've done a great job providing liquidity on screen and off screen, and we're going to give them a bit of help starting March 1st, 2013, with the addition of a few other market makers, and we're really going to jump. We're going to really jump in. We're going to go a bit stronger on this product, and it's our main priority for the following years. And to do so, another nice feature is offering 12 months of free execution for all proprietary traders. So for the next year, anybody trading BAX products or anybody interested in putting on option strategies for any proprietary traders, you guys get the benefit of free execution fees for a full year. What I'd like to highlight in this presentation is the way the Canadian market has its own identity. So more and more so, the rate environment is a bit different than what we find here in the U.S. For example, January 23rd, the Bank of Canada issued a statement indicating that a rate hike would probably be further down the road than expected, and which you can see on this chart in front of you, that I've taken 2 BAX curves, one a week prior to the statement, a week after. You can see a small shift in the beginning part of the curve downwards, strong increase in open interest, and showing basically the uncertainty in that market. The Bank of Canada was one of the first banks to hike following the financial crisis, and it's been signaling a rate hike since April. However, mixed economic results have kind of held the Bank of Canada back, and actually a recent poll that came out showed that half of Canada's primary dealers thought that there'd be a rate hike in about Q1 of 2014, and by Q4 2014 they'd be probably seeing a 75 basis point hike from what we're at now, which we're at 1% rate. They're expecting 175 by the end of Q4 2014. Another chart illustrating the difference between Canada's market and the US market. You can see the BAX implied forward curve versus euro-dollar implied forward curve. We took 2 points of reference, October 31st and January 31st. As you can see, Curves have shifted quite a bit more than the euro dollar, and we believe that a nice way of taking advantage of that could be as options on BAs or future, calendar spreads and whatnot. Another example showing volatility in our product is on this chart. We've illustrated daily ranges. So with the red bar is the BAX intraday volatility, intraday range. We took a 3-month average compared to the euro dollar, which probably in the front. These are the front 5 contracts. For the beginning part, it's almost double the range. Our correlation with the Canada-US futures is on certain times actually negative, and when you compare BAX versus your IBOR, very low correlation as well. So kind of links into what I was saying with having our own entity in the short end of the curve. Something I'd like to finish off with would be the liquidity provider rebate program. It's an incentive program that's for all proprietary traders. Every new trader gets the benefit from 6 months of free execution fees. And this is a program that's, the more you trade, the more rebate you get. It's volume that's aggregated firm-wide. And the other program, the competitive liquidity incentive program, also known as the CLIP, is volume ranked. The top 10 are entitled to cash stipend and free execution fees. Every liquidity provider member is eligible to enroll in this program, automatically enrolled actually, and we believe that we'll see a jump in volumes for these contracts. So that pretty much wraps it up for me. I'll pass it over to Jim. He'll show you how to utilize OptionsCity software to take advantage of our STIR market.
Thanks, Alex. One sec. So once again, everybody, my name is Jim Abbott. I'm with OptionsCity. Just to give you a background, if you're not familiar with our company, we were founded in 2006 by a group of developers at a proprietary firm here in Chicago. They broke out on their own and thought that they could build an end-to-end solution to offer to other traders, and released it to the public in 2008. So we've been in existence with customers for, you do the math, 5 years, 4.5 years. We have a large base of customers here in Chicago. We have an office also in New York, and we have plans to open an office overseas here in Q3, probably in London. We are, just to start, we are a certified vendor on the Montreal Exchange. We're very excited about this new OBX Market Maker Incentive Program because we believe there's a lot of opportunity in Canada, one, and we think there's a tremendous amount of growth in the options market as well. This should be interesting for both the traders in Canada who are looking for a more powerful options trading platform, and also for our existing customers who are looking for a different place to trade, where there could be larger edge and better markets, and especially when we, with their commitment for the liquidity from the new market makers, some depth of markets, and we're going to show you how you can utilize our software either as a market maker or if you're a market maker where you can scan for opportunities. Our software is server-based, so what we will do is we will host, or you will host, or we will host your server, where it will be co-located with the matching engine from the exchange. This will minimize latency and allow you to automate your strategies to have very, very fast response times. Everything's going to be done at the server level. On your desktop at the GUI will be a separate application where to also have a clean efficiency of CPU usage for both the processing and for what you're going to display on your screen. As an end-to-end solution, basically what I want to show you at this very brief overview is that we are going to be able to price, model, execute, auto-execute, auto-hedge. We can run missions. We can show our quoting parameters, and your risk profile will be tied in together. You can also trade the underlying, in this case the BAX futures, through our ladders. So it really is an end-to-end solution. You're not having to patchwork a couple of different systems. Everything can be contained and work in collaboration in OptionsCity. So let's jump right in. This first screen I'm showing you is just going to be our trade sheets. Within this one window is basically just a different way that we do with any window, we're going to give you an extreme amount of functionality where you're going to be able to click trade, where you can set up your different strategies, price those strategies, and it's based and set up rules. At its base level, what we're doing is we're going to model and find our theoretical values for each option. We're going to overlay the current market bid and offer, and then visually or automatically find trading opportunities for you to either click trade or for the computer to automate and do it for you. So what we have here, we're just showing strike price, we're showing calls on one side, puts on the other, and you can just set up some quick rules. If you, without looking too detailed, you can see some blue and some red. That's just a rule that, hey, this is a buying opportunity. The red is, hey, that's an opportunity for you to sell and get some theoretical edge relative to your values. How do we get those? We have within our platform, I think we have 14 or 15 different pricing models, whether it be Black-Scholes, Whaley, binomial, normal no boundary, some Asian pricing models for your energies. Whatever the case would be, is you would find whatever the underlying your basic pricing, you would use that. And then what we would also do is we're going to come in and show you how you can model your skew using different skew types as well. So what I'm trying to show you on this screen is you can quickly pull up and you can see graphically where what we're going to do is, again, we're going to overlay the live market, the bid and the offer. The green line is going to be our current, where we're pricing our prices on this skew. And what we can do is we can either manipulate this graph by data point and find where we think we can get our hours in line with the current market, or we can do it over here in a cell format where we can manipulate each data point as well. Once you've done this, and while you're doing this, you can also see down below in our output how the manipulation of your curve is going to affect the price and the Greeks for every strike, whether it be the call or the put. So if you're increasing the steepness of the skew, it's going to affect your delta, gamma, whatnot for each call, and we can display how it's going to affect each one very precisely. And once you're comfortable with where yours is, you can either fit it manually or you can hit apply and apply and give you a best fit based on your model. It's going to publish to your server and you're going to be using those values, and then you're good to go for trading. Now you've got your theoretical prices, and then you can go look for trading opportunities. Well, we can come back to the trade sheets. There is a very easy way to click on the strike. We've also introduced in 4.0 for our existing customers, this is going to be something very exciting, where you can just simply click on the strike price, and the software is going to, we call it Smart Complete, but what it's going to do is intuitively know, like if you do 3 strikes in a row, that's either going to be probably a butterfly, a three-way, a Christmas tree, whatnot. And so you just do that, and another button's going to populate at the top. You click that, and now it's a much easier way to construct your spreads. And once you construct your spreads, as you can see on this trade sheet, and if I can bring my mouse over, we can populate up to 30 spreads over here. And as our underlying moves, these spreads are going to update dynamically based on how the underlying price is affecting that. So you can keep it here if you've got a straddle or a butterfly. You can see where your theoretical value is, where your various Greeks, or you can also overlay the live market data as well. At any point, you can click on one of these and access a more traditional trade ticket, and this is for, this case, it's a butterfly. And you can see here, here's the underlying spot, here's my theoretical value of this butterfly, 2.35, and my corresponding Greeks. It's also going to break it down by individual leg. And there you go. It's as easy as that. If you want to manually trade this, click. You can tie it up as far as if you want to price this based on a different delta, you can do that as well. It's very intuitive and very easy to construct different strategies and then find your correct pricing for that. To take a step beyond and to kind of tie in with this, the Market Maker program on the OBX, our quoting engine is the standard in the industry. We have very fast quote construction and submission. Our proprietary quoting algorithms are second to none, and the speed is tantamount to get filled. But what we also really, really stress is in our group settings are our various governors that protect you from the, that you don't do basically as a trader your logical checkpoints of, under this certain condition I want to be this wide or I'll be this many up. and you're going to be able to populate those different conditions in our global settings, and the software is going to recognize that based on market conditions and give you the proper quote and depth that you want at every time. Because we are an open architected logic, our non-scripting technology allows it to react very quickly to changing market conditions. It's not having to go the processing of go through every logic at every point. So to quickly go into the quoting, this is simply, again, another window that we offer on our software. Like any other window in our software, you have the ability to click trade from here, bring up a ticket, and trade. You're not having to go to a separate window. But the quick takeaway from this is it's very easy to toggle from the different underlines to the different months. Again, we're going to display this way with our strike prices. Over here, we're going to have, in this case, our calls. We're going to have our theoretical value. On either side, we're going to have the live bid and offer. One step out of that is going to be the top of book bid and offer for either side. And then on the outside, you're going to see when we are quoting, we're going to then display where our quoting price is and the amount that we want to be quoting. It's very easy to change the quote settings on the fly. It's as simple as clicking on the range. As you see it over here, we click this range, and then we can bring this up. What we're quickly going to do here, we can set our edge, how wide around our theoretical value we want to be separately on the bid and the offer. We can also quickly set our quantity, hit apply, and then when we hit the start button, we're good to go. As I alluded to earlier, within our setting features, we can drill down much more specifically to meet exactly your needs that you want to tell the server how to react based on the conditions. It can be anything from if you're filled on X number of contracts within a rolling couple of second period, we want to back out, we'll still quote, but we're going to quote at a wider bid and offer. Conversely, if the underline is normally 1 tick wide and then it goes to 2 or 3 ticks wide, yes, I'll quote, but instead of being a quarter round, now maybe I'm $1 a round. And you can also base it on by delta, how deep you want your size to be. And what you can conversely do it from market joining side. You can start your quotes very wide, and then you can say if someone tightens your market, as long as certain conditions are met based on theoretical edge, I'll join that market as well. Maybe if I'm normally 50 up, maybe I'll join it, but I'll maybe 25 up, for instance. But you can automate that logic as well, so you're always going to be on the market trying to find those trading opportunities. Another feature that is very valuable to our clients is our target finder, the electronic scanning that we can do. We can quickly set the range. The way from this window we're displaying, you can see at the bottom that I've got multiple strategies running. You can click, well, I've got multiple strategies populated. We can quickly click on that strategy, start the mission, and once that mission's started, it's going to populate in that range your best trading opportunities based on your theoretical value. Now, clearly, you may start doing this just to see the best opportunity and then click trade out of this window, which you can also do. But where you're going to really experience the power of the software is you're going to automate these strategies once you're comfortable with your values in our system. And what it will do is, if you say, for this instance, if we're doing 100 contracts, it'll, on this particular strategy, and based on your edge range, we would take the top one, which is the best opportunity for 42, then we'll take the 25, on the second one, the 45, and that leaves us with 67. So we'll do 33 of the remainder, and we'll grab the 33 on that third line and leave the remaining 22. It will then turn off your strategy until you tell it to turn back on again. So you're not going to over trade. You can also auto hedge those trades as well. So you're trading delta neutral, and you're just looking for theoretical edge for the trade. Also built into all of our software, the wristband is built in. It's also going to go off of the way you construct your theoretical values in your Skew. You can easily set up a wristband by groups. So if you're trading multiple products, you can have different buckets to show different trading groups, whether it's a group of traders, you can break it down by trader, or if you want to break it down by product specificity. And then what you can do is you can aggregate everything at the top, and there are different ways in our groupings to make everything apples to apples on your span, and it's going to give you in the middle, it'll give you your current theoretical P&L with your requisite Greeks, and then you can set the different spans, whether it be up and down by percentage or by absolute value, or you can do both if you so wish. You can set these different groupings by group, by month, or by strike. So basically, what we're doing is we're trying to visually show the trader exactly what he needs to see, laid out exactly like he likes to see it, so he can access exactly what he needs and then get back and find trading opportunities and maximize his trading efficiency. What we also offer within the risk manager is the ability to use offsets, what-if situations, shocks. I know in the U.S., Monday is President's Day, so Thursday afternoon, maybe you want to take Friday, Saturday, Sunday, and Monday off and run it against your theoretical values on Tuesday, see what it's going to look like when you come in. Conversely, if you want to do some vol shocks, if you want to raise vol 5 or 10 points or lower it, you can run these offsets, and then your risk man will show you based on the parameters that you've populated. Besides just the risk report, we can also break it down by month, an edge report, and position report. I think the position report is one of the more important ones. Basically what you can do is you can box off your position. You can show where you have inventory on both the call and put side in every month and every underlying that you have, so you can quickly see at a glance where you are. Or sometimes more importantly, if you are managing a group of traders, you can use this position report and kind of do a quick analysis on the various traders in your group and see where the risk may lie and where you may need to tighten things up a little bit. So that was kind of just a quick overview on the Metro, which is our flagship product, which is perfect for market making, especially perfect for market making in the short-term treasuries. What we've also introduced in the last year is OptionsCity Freeway, which is our automated strategy algo platform. It's designed to build, test, and deploy algorithms and microsecond execution. This is going to be of interest to people who are trading multi-asset, multi-exchange. It's also giving us a better footing into the futures market, so we're not just options trading platform. This can automate any strategies. Where it really resonates with our customers is the ability to report and backtest, and the ability to really streamline code and deploy your strategies in a very quick and efficient manner. So when you come up with a trader comes up with a new strategy, you can code it very quickly so that strategy will still be valid instead of taking it to a developer, taking far too long, and then you're not even sure if it's true. We will do all the maintenance for all the connectivity to the exchanges and all the underplumbing. Let you concentrate on exactly what you're wanting to do. Program it, and then when you program it, it is very powerful in our dashboard to display, and this is a very, very quick overview. What we're doing is we're kind of lifting the skirt and showing you the measurability of the response times, not only from receiving the data, but also the execution. And when we send the signal back to the exchange, very quickly, this is going to be your log of everything that's sent. The recording and playback mode is really important for people, primarily when you're validating your strategies and testing that everything is true. So we give you the ability to take a snapshot of some market data, try to refine your strategy. It's very easy to configure and expose the variables to where the trader can change the different parameters, continue to run the algo, see exactly how it would have performed in a dev environment before you go and then automate and go and deploy your strategy into the real life market data. Everything on the dashboard, it's easily displayed. Again, it's very intuitive to the traders, what they want to drill down and find. It's very easy to navigate, and it's just another extension of helping the trader and the programmer converse and translate exactly the trader's needs for the programmer to then deploy exactly what they want to help the validity of your strategies and make you more money. That's a very quick overview of what we have to offer. Once again, on behalf of OptionsCity, we're very, very excited about this renewed commitment with the OBX from the Montreal Exchange. We're very excited about this liquidity that they're going to be provided through the market making program. I think it's great for the market makers and for the traders. I think there's opportunity for both sides. Our software works very well in this environment, and I hope that you will take a look not only at our software, but also at the products that the TMX is offering. On the screen right now are our contact details, both for Alex and myself. Feel free to contact either one of us with any questions. I think I can speak for Alex that we would both be receptive to having further discussions for the specifics of what we've focused on today, or any other questions you may have. Alex, anything else?
Well, thanks for logging in and listening to me and Jim go over these these slides, and that pretty much covers it.
Thanks so much for joining us today, guys. We appreciate your time, and look forward to talking to you soon. Have a happy Mardi Gras. I've got the Frenchman with me, so I'm going to let him say the Laissez la bonne temps roulée. Or he let me say it. All right, I butchered it, but anyway. Thanks a lot, guys.